that is what I'm looking for right now. That is what I'm asking myself. I'm on the 50-minute time frame. Have a look at this push down here. And this market came and pushed down into these levels. Okay. All right. So we're in here. Now, how I'm looking at it is this market now going to start breaking some 15-minute structure, which is here? Okay. Or are we, if I drop my time frame down to 5 minutes, which is the lowest I really want to go. Is this market going to start breaking some of these levels in here? This is 5-minute structure in here. Okay. Now we've seen this market wick up here. First, it's just all wick action on the 5-minute time frame. Then it came back down in here. Then we've actually got a 5-minute close here, breaking that 5-minute structure. All right. Now on the smaller time frame, yes, it has broken, indicated, corrected, and continued. But on a larger structure, we've just got our first 5-minute closure above this little level in here, which isn't a great level. It's minor structure. Yeah. What do I mean by minor structure? I mean that if I was drawing this as some lines in, we'd be here, we'd be here, we'd be lower low here, we'd be lower high here, we'd be lower low here. Yeah, we wouldn't be taking into consideration this little middle area here. This is that we can see some minor structure in here. And if I was to drop my time frame down, you'll see it better. Yeah, can you see that little energy in here? If the market pushed down, then it came back up in here. But there's all of this little minor stuff in here. It's a bit minor. All right. So, although this market is looking like something maybe on a 5-minute time frame, making a little closure above here, it's not great at the moment. All right. A 15-minute closure above this level is a lot more telling. We get an indication here. All right. We get an indication here. Some sort of correction. Right. Some sort of continuation. All right. This will be a much better entry than looking at it from a 5-minute perspective, because the structure isn't that strong. It's like I'm reaching in here, looking for some 5-minute structure, which isn't that strong. It's minor structure, a little bit of a meh. So really, I'm going to pop an alert over here, crossing above here. When that market crosses up above here, then I'm going to be interesting because it's broken some actual structure I can see. If the market decides to start pushing down, okay, and it goes down below these levels, and maybe, like I said, this was just a liquidity grab. All right. And the market's actually going to keep falling down into this direction because we are up high on the premium of this level based upon this angle here. These are all this is a premium area. We're expecting to potentially see this market turn around, but the market is allowed. At the moment, the market broke structure here, indicated, corrected all the way up into this point. Okay. Let me put a little flag in there. Let's go and find a little flag. All the way to this point here. All right, let's make that flag a nice color. Nice little white flag we've got in there. All right, so the market came down here. I don't want to see it necessarily breaking this flag, or if it does, I want to see it just very fast grabbing liquidity to start making its way down here. Obviously, the next major area is this. This is a swing high. This market I do not want to see, because look, it could take the piss and decide to come all the way back up into this orange level. All right, because look, this is this bigger orange box, right? This is this bigger orange range. It could do that. There's things going on in the world that are dictating US dollar. Remember, US dollar is the reserve currency of the world. There's stuff happening, and there's stuff happening in Great Britain as well, etc. So we're looking at the British pound, looking at US dollar, and the market could decide that US dollar gets some weakness based upon, and we could see it push up into those levels. But the reality is that we have to trade what we see. Yeah, we can't trade based upon what we don't know. Because look, on here, this is the 4-hour time frame. On a 4-hour time frame, that little indication, that little energy that happened yesterday, this big green candle, broke 4-hour structure. Potential indication or liquidity grab for it to continue coming in this direction. All right, hence the reason why I said that we're going to wait and see what happens. Is this market just grab some liquidity now, going to start breaking down below this structure? If this market starts breaking down below this structure, sells, looking for entries to sells. If this market pushes up above here, maybe this market would buy it up to the top of this range, or even more so to the top of this whole consolidation area, this whole orange box, which is their big moves at the moment. Which I want to see what the market does, how it reveals itself. Like I said, on the smaller time frame, we saw this big massive impulse yesterday based upon news. Yeah, I was there for the buy, but I just got a little bit caught up doing something, and I wasn't able to get into that trade. That was like about 100 pips. All right, quickly zoop all the way up there, and then we saw the market slowly but surely come and close that imbalance. But right now, that imbalance is practically closed. All right, and then we're starting to see price breaking outside of some structure, doing some sideways stuff in here, a little piece, and potentially, like I said to you, based upon the lowest point, if we're trying to say it's over here, I really want to see it break this little level in here to confirm what I think it may do. On a smaller time frame, it's broken some smaller 5-minute structure. At the moment, there's been a closure here on a 5-minute time frame, but it's a bit reachy, is what I said. It's not, this break isn't a break of swing structure. It's a break of some minor structure in here, which we can see. It's a bit of a minor little mountain in here, a little molehill, not a mountain, a little kind of hill. All right. This was a wick, didn't close above it. All right. But this definitely was a closure. And now after that indication, we're expecting to see some correction, which we are seeing at the moment. Maybe that correction is going to correct into this imbalance that we can see over here. Okay. And then afterwards, we want to see some sort of continuation closure above here, but that would be on the 5-minute time frame. And like I said to you, it's less sure. If I was to say, for example, take this trade like this for 6 pips, it's a little bit higher risk, but it's higher risk than if I get an indication above this level. So I would advise for anybody who wants to take a safer trade to wait until you get some sort of indication above here, and then you can choose to either, when you take the trade over here, if you get a nice correction, a continuation above that level after your indication, you get a nice correction, nice continuation, wherever that may be, it might be a bit higher than this. You've got a choice of placing your stop below that last low, or being very safe and placing it below these kind of areas here. Look, this, even if you place it all the way down here, that's still only a 17 pip stop. All right. So let's just say, rounding it up, maybe 20 pips. Where would you be targeting? Well, you'd be targeting these equal highs over here. You'd be targeting those equal highs over here if we believe that market's going to go and push all the way up in there. If this is just a liquidity grab, then this is an impulse coming down here, only for it to retrace and continue down. I would also identify, have a look, the 50% level of this impulse over here, saying at this point when the market gets up here, you should be protecting your position. All right, just in case that market does decide that this actually was just a liquidity grab. All right, so this is a plan for this trade. Plan is, if that market gets up into here, be quite concerned that the market, let's have a look at it and try and see if we see any imbalances or any reasons why there is a nice place to turn around. If you see some imbalances above, you can in here, and some imbalances in here, or an imbalance in there, I should say. All right. We go to a 4-hour time frame. This whole area is an area of imbalance where that green line is. This whole area is a 4-hour imbalance. So I'm gonna mark it in here 1 hour. Oops. I'm gonna mark it in here 1 hour. All that 1 hour is sitting also within this big 4-hour area. Now that's not giving us great deal of accuracy of where it might go. All right, let's have a look on a smaller time frame. 15 minutes, I can't see anything that jumps out at me. All right, can't see anything that just leaps out at me. And on a 5-minute time frame, here we can see some little candlesticks on such. But either way, this little area here, i.e. 50% area, an area that I'll be interested in protecting my position. So on a 5-minute time frame, like I said, we did get a bit of an indication over here. We are getting a little bit of a correction here. Is this market going to come down and correct into that imbalance? I don't know, but I don't put it past it. At the moment, it hasn't closed. It's still in wick action. We've got a minute and a half for the 5-minute candle to close. It could easily come down here first, get into this kind of area here before coming and closing back up here. So, as I said, I'm just simply going to be patient. I'll be patient here above this 5-minute stuff, and I've also got an alert above that 15-minute high, which is this little yellow line over here. All right, so that's giving me all the information I know to be able to make some decisions. Okay, and yeah, I'm gonna leave it like that. All right, I'm gonna leave that like that. I'm gonna move on. So let's have a look. Also, we was looking at gold. All right, we was looking at gold. Let's have a look and see what I've gone for gold. All right, so in regards to our gold, and it was yesterday, Wednesday the 12th, we was here in this area here. And what did I say? I said we was at the bottom of a range. The market was in here doing the okie dokie. All right, and we're at the bottom of this range. In fact, when we was looking at it previously, we identified some, when we was going back testing, potential buys from down here, again, from a discount. All right, sorry, if I said premium before, we're in a discount, we was in this discounted area. And what we saw on a very quick time frame, more than likely, was an indication correction and continuation. But let's have a look. Let's drop into my 1 minute, and let's see if there was any way possible that I, or something yourself, if you was on a smaller time frame looking at this, would have been able to catch this, even though it was driven by news. Well, look at it. Look at what I said. I said we're down here at the bottom of this discounted area, which was this line here. Have a look. You see? And if we were to draw some lines in, we'd probably draw some lines in first, looking at something like this. But then we can draw a line in like this, okay? Which is taking into consideration this lowest point here as the market was pushing down, all right, close to the time. And have a look at on a 1 minute time frame, which we've seen a lovely, this is structure. Look, have a look at this structure. It's a 1 minute structure, all right? It's a 1 minute structure. We're going in here, maybe even, let's have a look at 3 minute structure. Yeah, we can see some smaller 3 minute structures. Let's just stay on a 1 minute for now, but we can see the clean, where is it gone? Let's have a look, let's have a look, let's have a look. We can see this indication of a closure above all of this structure. That indication actually pushed up some more wick-wise up into here. Then we saw a lovely correction come down and do what? Close the imbalance, because here's where the imbalance would have been. Have a look. The imbalance would have been in here. Okay, can you see it? Should be able to. In here, let me put the words on it, would have been the imbalance right in here. The market came down, closed that imbalance, slammed the door on it, then came and corrected up into these levels, and boom, exploded. All right. In fact, it didn't even give us a closure here, all right, to say we was being able to get in. But what we could have done is this. If you really wanted to get into this trade, we would have anticipated the fact that news was at 1:30. Okay. The news was at 1:30. And this market was, we're looking at the time, you've seen this big bullish candle here, you've seen this movement here, seen this movement here. Potentially, if you had decided you wanted to get involved in that news, I would have understood and you would have got in for the buy. You wouldn't be in here saying you're getting in for the sell. All right. But yeah, and that absolutely exploded in that direction. Now let's see where we are right now with it. Okay. Let's see where we are right now with it. And where we are right now with it in this market is that the market pushed all the way up into these levels. Remember we was talking about these imbalances? You see, they're still sitting in here. Look. Okay. We was talking about this market could come up here, close this imbalance. Well, definitely. What did it do? What did it do? Exactly. Might as well say, pretty much on the money. Came and closed this imbalance. Pushed up into this. I can get rid of this 4 hour. Oh, sorry, this daily and 4 hour imbalance. I think it looks like. No, it's like 4 hour imbalance. I can get rid of it. Because in this 4 hour imbalance, it came and closed it beautifully. And it's just about past 50% of the daily imbalance. Let's have a look at them. 4 hour one. That's what we identified. Yeah, that market could go and close that imbalance. Have a look. Can you see this in here? Was the 4 hour imbalance I just deleted in here? Came and closed it beautifully. Then came back down here, closed the imbalance. But remember what we said, we still got these other imbalances up here, which is the daily one's still 50% open. The daily one's still 50% open, and we've still got this 4 hour imbalance in here. So don't be surprised if, just like the GU, we see this market do this. All right, let's have a look at here. Boom, there we go. So on a 5 minute time frame, in the next 1 minute and 20 seconds, which is a bit more aggressive, this when this candle closes, could be an entry. Your stop could be, or should be, if it was below this wick here as an aggressive entry, it has to take into consideration this imbalance, okay, for 8 to 10 pips. Here's a much safer place, obviously below this swing low, just in case, because you know we don't know whether or not we're going to get a little bit more volatility and that wicks past that imbalance and then goes, and you just be mad that you got it right. So this is the safest place, and it's not too big. This is only 14 pips. All right, so we have spread times 2, I know, maybe 15, 16 pips on the basis that this market may continue going. So I think this, and you know what gold is could be quite similar. Let's have a look. If we knuckle down on gold, it's doing pretty similar stuff. Now, what I'm going to do is I'm going to wipe my charts. This is just a mess because of 2 days worth of annotations. Okay, and I'm gonna quickly mark the major lines that we need to see in here. In fact, let me just delete off. I'm not gonna remark. I'm gonna delete off things that don't need to be there. All right, just so I save some time. All right, so if I go here in my 4-hour time frame, pow, let's get rid of all these. Let's get rid of these fibs. Let's even get rid of this yellow box. Let's get rid of some of these squiggles. Well, actually, I'll leave that one because that one's exactly what's going on at the moment. Let's get rid of these fibs. Let's get rid of some of these imbalances. Let's get rid of some of this long position stuff. Let's get rid of some squiggles. And get rid of this also. Okay. Get rid of this yellow line, which was just telling us before when Breakfast Club was, from the day even before that. Okay. So, as we can see here, I'll get rid of this daily. The daily is there, big daily imbalance. And we can see that the 4-hour, I'm gonna get rid of some of these lines as well. The 4-hour imbalance has been closed. It's here. It has been closed perfectly. Look, shut the door. As soon as it shut the door, ran back down here. Yeah. It's pushing down in this little area here. The question is this market going to start price breaking out, but to come and push up into some of these levels? Let's get rid of this also. This is like a previous imbalance. All right, so that's a bit cleaner now. Our eye space is a little bit better. See what's going on. Get rid of some of these little squiggles. These little squiggles, probably I was showing structure. Okay, so when I drop my time frame down, I'm concerned now, or I'm not concerned. I'm looking at whether or not this market wants to look. So if I draw some lines here, have a look. These are some lines. Okay, this market was trading up. Why have I drawn a line like this? I'm touching the lowest point before the highest point here, the low before the highest point. Okay, and at the moment, yes, we have seen this market wick, but not close below this structure on the hour time frame. Look at this. All of this is wick, wiggity, wick. Not closure. Not closure. All right. So I'm looking at it and I'm thinking to myself, okay, if I do this, we can see price currently is breaking outside of this market, outside of this range. Okay. And we can see on a 15-minute time frame, once again, very similar to GBP USD structure here. All right. On a 5-minute time frame, there's some smaller structure in here. Can you see possibly in here? But the market indicated, corrected, and on this candle here, which is very identical to GU, it had a closure. If he was very aggressive, this could have been your stop below the correction. Okay, or you can take all the way down here as a safer stop. All right, and at the moment the market is pushing in that direction, so it's very, very similar to what is going on in. Oops. Go back to 5 or whatever. Add GBP USD. Very, very similar to what is going on in GU. Yeah, coming down here. This is purple line's GU, and then coming back up here, and then pushing back down, and now pushing back up. Very, very similar. Hope you can see that. All right. Now these markets don't necessarily always move together. I don't think. Oh, well, they don't. Sometimes they do have that synergy happens. Yeah, sometimes they do align because of factors. Remember, whenever you're trading these markets, you're not only worried about what's happening in Great British Pound, but what's happening in US dollar. You're not only worried about what's happening in the gold markets, what's happening in US dollar. They're not the futures. The futures are just the one thing. So have a look over here on the 15-minute time frame. We're now possibly going to get some sort of closure above this structure. On the 5-minute time frame, this market is moved into profits, came back down to zero, and is pushing up in here. Now the question is it gonna let's look to make sure we haven't missed anything. So we're going on bigger time frames and thinking to ourselves, if this market wanted to play silly buggers, have I missed anything? Any reasons why it could retrace? Let's go to the hour time frame. There is a little bit of imbalance here. Don't know why it's not opening up. Yeah, there's a bit of imbalance in here, but our stop is below there. There's an imbalance in here, but our stop is below there. It's below that imbalance. I don't know why. Oh, I know why. Guys, if it's just ever moving a bit funny, it's because here it's changed from price to percentage, and you want to put it back to price. Okay. So you can see here there's a bit of imbalance here, but this is, if you maybe can't see it quite because it's got a bit small, is where our stop was below this level. So we're below that 1 hour imbalance, and that's about it. So I think that's a pretty safe position for our stop if this market's going to continue pushing up. And similarly, I'd probably, if I zoom out, let's go to my 15-minute time frame. If this market was indeed just wicking up above here and it's going to be bearish, which I don't necessarily think, we'll see. I'm going to look at the bigger picture. We can pull out the whole impulse and try and identify where 50% would be. There you go. RGU still going up. Let's have a look. See it? Yeah, see it? It's going. It's going on a 5-minute time frame. We had that indication, correction, continuation. All right, it's going. Same with gold. So like I said, I would also identify that 50% area, which is right there. But potentially, is this market trying to get back up to close this imbalance and beyond? Because have a look, let me get rid of this. This is previous stuff. We can see the imbalance. We can see the draw on price. We can see it in here. All right, market's pulling on price, pushing into these levels and potentially beyond. All right, potentially beyond. Does everybody understand the breakdown, how I've broken it down? Is it making perfect sense? Or
yeah,
should do, because it's muscle memory that I should be building up with you guys, because the strategy doesn't change. And being able to look at this and understanding how it works means that when you do combine it with markets open, for example, lots of liquid volume in the markets are moving. When you do combine it with understanding exactly where you are, top of the top in regards to our Russian dolls, etc. When you do combine it with seeing the consolidation, being patient, understanding you're in the right location and seeing an indication, correction, continuation. And then more importantly, when you do combine it with somebody said, one of the most important things.
Risk management.
Exactly. This is one of the most important things, is the risk management. All right. Can't go into the rest of it. All right. The risk management. When you are able to get into trades and be trading profitably and happy, yeah, and you're content and you're only taking 0.5% worth of risk, it means that you've got to that holy place. You've got to a place where either your account's big enough and you're content enough to be able to take very small risk on the basis that if you have a bad day, it doesn't matter. Yeah, that means that you may have, good money under management. Let's have a look at what good money under management looks like. You taking 0.5% risk and how your life changes, or how it affects your life, I should say. So let's imagine, for argument's sake, you've got £1 million. No, let me not go £1 million. We go too far. Let's go 100 grand. Okay, let's just go 100 grand. Why is this down there? 1 second. 100 grand. Okay, not prop firm money. You've got 100 grand, and every single day you're only going to be risking 0.5%, which is £500. Okay, So you're risking £500. And let's say on average, let's just be conservative. Let's just say that you can, from your £100,000, that you can make a what's conservative, guys? What, 1 to 3? Is that you know, is that conservative? Nothing too dramatic. It's not 1 to 5 or 1 to 10. 1 to 3.
1 to 3.
How much money do you make a day then off of your 100 grand? If you was able to take a successful 1 to 3 trade daily, how much money do you make?
1,500.
£1,500 a day. Okay, so I'm going to ask you guys honestly, you know, because I don't know how much you make. I don't know what you do for everyone does for a living, but with £1,500 a day, yeah, 5 days in the week, £7,500 a week on a 5-day week, yeah, times by 4 is £30,000 a month potential profits that you make on your money. Do you believe would and I'm gonna just asking people, because everyone's got different, you know, costs and different things that they like. Somebody out here needs to drink, needs to bathe in I don't know what's the expensive water. I don't know. But there's £30,000
Manuka honey and milk.
yeah, you know, there's £30,000 a month. Get you the life that you at the moment, you know, you could
100%.
Off of the back of 100 grand. Now, I'm not trying to say
freedom.
I'm not trying to say that that's, you know, easily achievable. All right, because you know, every single day you might not get 1 to 3. What about the losses? We've already said that you're going to get the losses, but let's imagine that you don't do that 1 to 3 every single day. You only do half as good. Yeah, you only do half as good as 1 to 3. So maybe Monday to Wednesday you take some good 1 to 3s, and the other times you take some losses. But you only do half as good, basically. Okay. Does £15,000 a month get you a decent standard of living? Does £15,000 get you a decent standard of living? I tell you what, because that's still 15% of your account. Just forget about that. Let's just say you only do a quarter as good as what we originally started off with. All right. So £7,500 to £7,500 from trading get you a decent standard of living. I mean, we've gone down from saying that you do 1 to 3 every single day. We've gone down to saying now you don't do it every single day. Half of the time you don't do that well. So you know, went from 15 to 7. I mean, 30 to 15, 15 to 7.5. I think so. I think £7,500 a month from trading off of a 100k account, which is 7.5%. I mean, the prop firms want you to do 10%, and then 5%. So let's imagine that you could get just a medium, and you can do 7.5% a month. The £7,500 pay your rent or mortgage, let you drive whatever car you want to drive, allow you to buy some nice things. Of course it does. As a trader, as maybe a one trade doesn't. I mean, you haven't quit your job yet. Let's even drop it down some more. You know, who would take right now $3,750 a month? Yeah, from a 100k account that they've got. Who would take $3,750 from that every single month? It's $3,750.
Yeah, no complaints here, fam.
There's no complaints, because I'm not even on the fact of who would take it. I'm just talking about on a realistic level, that there's most people don't make that money a month working. I'm just putting it out there. No disrespect. Yeah. So to be able to turn and say that you're making that from just a 100k account, 3.7% a month on your £100,000, that's not money that you make your money sitting in the bank. So right now, without you knowing, this is what I'm trying to show you. I'm giving you guys the dream right now. Let me mute this little thing. I'm giving you guys the revelation. Without you fully understanding, by being here every single morning in the Breakfast Club and understanding how to trade and take trades to make 3.7% a month on your money, all you need to do is get your hands on 100 grand. Yeah, you might say, oh, that sounds, yeah, all you need to do. I'm just saying, who knows? Sell your house, Your uncle gives you some money. Maybe you take your mom, your dad, your auntie Jackie's money, you put it in one account. I don't know. It's none of my business. Money makes money. How you achieve and acquire that money is none of my business. My business is to teach you how to trade. Yeah. There are ways in which we can acquire that money, prop firm challenges to do certain things. But I'm showing you the prop firm needs you to get 10%. I'm saying to you, if you had 100 grand, forget about prop firm, and you can make 3.7%, you're going to be taking home 3,750 a month, which I'm telling you, for most people, pays their rent or mortgage. It puts whatever car within reason. I'm not trying to say that you're driving a Wraith. Yeah. Yeah. Within reason, puts you a decent motor outside on a 24 plate. Yeah. And allows you to navigate the world, buy what you want, eat and eat out whenever you kind of feel like it, within reason. Yeah. You're not in Galvin in the window 5 times a week. All right. And you have the tools to do this. Let me show you the difference. The difference is your mate gets 100 grand, doesn't know how to grow that money. He's seen some videos online about doing burr, buy, refurbish, refinance. He's seen some other videos about eco, but he doesn't really know. You guys, for free, you might as well say, within being part of this community, know how to do this. Because I don't see any reason why you guys can't make 3%. You could work it out backwards and be like, I tell you what, I'm only aiming for 3.7%. So every trade I take is going to be 0.2% risk. On the basis that I take X amount of trades, that you could do the math on it. But this is a math problem. You could do the math on it. You could say, look, on average, I've looked at my history, I only win 40% of my trades. Yeah. And you could work back on how many trades you need to take, what type of risk to reward you need to achieve to be able to make 3.7% on 100K. And now you'll come from a position of turning around and saying, because remember, when you start to make this money, again, you haven't necessarily quit your job. This is compounding in your account. You're not the best trader. You're not like some phenomenon making this money. Let's just scoot back up. Let's imagine you can make 7.5% in a month. Why shouldn't you be able to? I mean, the challenge is 10% a month. So let's imagine you make 7.5%. So after 6 months, which are going to fly by, you've made an extra 45 no on your 100 grand. Maybe you haven't touched the money because you want to compound that money. Maybe now when you're taking a 0.5% risk, you're now taking a 0.5% risk on 150 grand. And then when you get a 1 to 3, you're now making 2,250 for the day. How does 2,250 for the day sound? Sounds all right. Even if you hit this 2,250 once, you could go and lose another 3 times in a row and you'd be still back to zero. Like, this is trading, guys. The problem is like I said, we start with very little money. So therefore, your 1 to 3 is not good enough for you. Or you're looking at your account and you took a £10 trade, you risked £10 because it was a percentage of your account, and you made £30 and you're not happy with that. But I'm telling you, the best thing that I could do for you is I could say to you that remove this as money. Remove the results as a monetary figure. In your brain, make it a percentage figure. And then you just think to yourself, every single day, if I made X percent, or every single week, if I made 1% or 1.25% on my 100 grand a week, I'd make 3,750 at the end of the month. That would pay for my lifestyle, I'm not gonna say dream lifestyle, because you're not going crazy, but would pay for my lifestyle. There's somebody on this call right now that's had 100K. Yeah, maybe all of you that's had 100K from whatever reason, and you didn't know how to grow it. But I'm saying to you now, you do yourself, not relying on anybody else. You might feel a bit daunted. Oh my gosh, my 100K, I'm gonna grow it. I'm telling you, if you was growing that 100K, only risking, let me use my calculator again. Is it gone? Only deciding that you're gonna risk every trade Not 1%, which is £1,000. Not 0.5%, which is £500. Not 0.25%, which is $250. Maybe $0.100. Out of your 100K, you're only ever risking, you open it up, put it in a broker's account, $100 at a time. Because if you get a 1 to 3, that's $300. Oops. And if you're able to do that for 13 days, you've made 3,900. I mean, there's 30 days in the month. It's giving you a good few days to not do anything because you don't see a good setup. Risking $100 at a time. Like, you'd feel comfortable when you've got your 100K, real money, and then you take your first trade and you lose, and it says 99,900. You're still like, yeah. You take your second trade and you lose, and it says 99,800. You're like, yeah. You take your third trade and you hit, and now it says 100,000, 100. You're up. Then you take your second trade and you hit. You're now 100,000. This is how your team grows. And this is how you have to be happy with that growth. Because the reality is when you really deep it and you did that £300 or make your account by £300 or whatever it is, you got to ask yourself and you got to look in the mirror. I can't answer it. When you wake up in the morning or when you do whatever you do, and you're out there taking risks, or you're not taking risks, or you're taking risks even with your time, jumping on a train, doing this, taking orders, taking instructions, your manager's an idiot. Do you make £300 a day? After you take into consideration train fare, food, this, that, national insurance, boom, tax, blah, 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 blah. I'm not trying to say you don't pay tax on trading profits. That's another conversation. Yeah, but I'm just saying. And if not, you're like, rah, with very, very little results or effort, you're already outstripping your job, which you go to work for and essentially give your life to. And then when you get confident enough or you're making enough money, then you drop your job. And then when you get more confident enough, you take your laptop and go wherever you want to take it and trade. And then all of a sudden now you're a trader. That's what you've been equipped with. Like, even though right now sometimes it feels like a game, and then Jay's asking you, can you see the imbalance? But the reality is the only thing that's missing from that mix is the commitment or the, those last bits of psychology or whatever it may be to get you to the point where. And I said this, the reason why I've had this little conversation with you is I'm saying to you, you could substantially look. I'll tell you what you could do. You can go and get a prop firm challenge today. If you've got the money, go and get a prop firm challenge today. And your aim is you're not trying to pass it in the fastest possible time. You're just going to leisurely pass this challenge. Yeah, you're going to plan it out. You're going to say there's, 20 days worth of trading in a month. And how many trades could you take a day realistically? You're going to work it all out. And you're going to come in and say, you know what? I can afford to come in here and I'm just going to go and risk $100 at a time. And that might take you long. You are taking a lot more trades, but you're going to be turning around and saying that you're going to take in the best trades. Or alternatively, you could take another angle on it. You can say that you're only going to take a trade when it's right at the top of a premium and it's done that and it's broken structure in an hour time frame. You're going to take a much bigger trade with a bigger amount of money. What do I mean by that? I mean that you're going to take a trade. You're going to be this guy. You're going to be this guy where we're in gold. I mean, I don't know if it's best idea in gold, but either way, let's have a look. This market's going to come up here to the top of this range when it first came up here and touch the top of this range. Let me see. Let me just make sure it's not something that I've written in hindsight. Yeah, this blue range was taking into consideration data points. And when this market was up here and started to break structure on a much larger time frame here, for argument's sake, on an hour time frame, I'm trying to see our strategy. When the market came up here in this blue range here, well, you wouldn't have got in here because we haven't broken no structure. If on our time frame, we indicated we didn't correct and continue. All right. The market, yeah, there's no real entry here because look, here's the wick now, which is just an indication. Then it's all fraff, and then now you get the bottom of the range or bottom of this little smaller range. Okay. So I'm trying to see. Okay, here, look, price starts breaking outside of the market. Cool. Now you're in the game. Price is breaking outside the market. Then you've seen this push up in here. You're waiting for this indication. We're actually where we are right now. Waiting for this indication where you've got below here. You haven't got a correction into that level. The market kept pushing down. So maybe even now, maybe on this hour time frame, if you get a closure below here, you're going to enter with your stop up like this, maybe, or over here like this. I don't know if it's best in gold. Gold's a bit of a safe haven asset. Yeah. And you're just going to say, you know what? I'm going to take that trade for a larger percentage risk, but that's the only trade I'm taking on this account. And I'm going to leave it to see if we can get down to the bottom of, I can't see where I've drawn the bottom of that range. Yeah. You can say first and foremost for the bottom of this range. And then there's obviously, let me draw the TPs in. Bottom of this range, then maybe bottom of this, make them blue TPs. Bottom of this range, and maybe the bottom of this range, and then maybe the bottom of this blue range. You're just going to leave it. But that's the only trade you're taking on that account. One trade, leaving it. Stop if you really wanted to do it properly above the swing high. If you get down to these levels, calm. You're catching a 1 to 3 trade. You're gonna make $3,000 from a trade. How long is that gonna take? Nobody knows. I wouldn't advise that on a prop firm challenge because when you're learning, you could do it on like you had your 100 grand. It's your money. Because it's different then. Because that's like your savings account. You're just growing your savings account in the background. You're going to go, Jade, look, boom, show me your account. You're up 4 grand, 5 grand. If that happens in a month or 2 months, that's still 2.5 grand a month. You're growing your money. You're laughing. You're happy. You're happy with trading like that. But if there's an account that you want to take trades on regularly because you're learning, trying to get better entries, bigger risk to rewards, you have to understand that this exercise is about managing your risk and patience. If you're taking good trades, you need to get the work in. And I would be advising you to manage your risk on a smaller side of things and growing that account slowly. I want someone to tell me and say to me, yeah, I passed my account, I passed my challenge after 2 months. That's actually what I want someone to tell me. It sounds a bit boring. Or 3 months. Sounds a bit boring. But it showed me that you was managing your risk and you was patient enough to methodically put one step in front of the other and pass it. And you know what that means? That means when you get your payout now, because you catch some heavy trades and you get a really good payout, 40 grand payout, 50 grand payout, who knows? And you get your 100 grand from your prop firm challenges. Because maybe you buy some more challenges. Maybe from your winnings, maybe get a smaller payout, you buy some more challenges. You don't go buy some big change straight away out of a £1,500, 2 grand payout. You buy some more challenges. So now you're like, Jay, I'm not gonna lie to you, I've got £1 million under management. Yeah. So then when you actually then make 10% on your £1 million under management, now what have you got? Got your 100 grand. And because you've now gone through the pain and the discipline of trading it on this level, you can easily make your 3.7% a month, which we've already agreed pays for your current lifestyle and some, because you haven't quit your job or your side hustle. This is the plan. I'm giving man the blueprint. This is the plan. It just takes patience. And that patience is easier said than done. I lack that patience. You probably lack that patience. Or it's because you think too highly of yourself. You think to yourself like, right. Especially if you take a trade and you only risk $100 and it went for 500. And you're like, oh my gosh, if I only risked 0.5%, I'll be up X, I'll be up Y. And then the next trade you force. But I'm showing you how to not force your trades. You're only taking your trades from here. You're only taking your trades from here. You're only taking your trades from here. Oops, what am I doing? I thought I was using this. You're only taking your trades from here. You're only taking your trades from here. And even then, you're managing your risk depending on where you are. You're only taking trades from premium. The only reason I did that because we're on a massive 8-hour time frame. You're only going to be taking those best trades. You're only going to be taking trades when candles close. You're only going to be taking trades after you've checked the imbalances on all time frames and placing your stop in the safest place. I'm going to stop showing you guys the high risk entry. It's unnecessary. Low risk entry only. Low risk entry only. I want you guys to now what I need from all these you guys on the call is, I'm determined to get you guys funded. I want you guys to be funded. I want you guys to now be telling me, saying, not just saying, oh, I love Jay's education, I love being here in the morning, blah, blah, blah. I want you guys to now be saying, and I made £500 from trading this month. And I made £1,000 from trading this month, because it's in you. And I don't want you guys to get into this this paralysis, this like, I'm going to take my prop firm challenge and building it up. Don't have to build it up. Get in now and just manage your risk so that you're not going nuts and you can't blow it tomorrow. That's it. So if you turn around and say to me, bro, I'm not going to lie to you, bruv. It was a 100K count. I'm at 98. For you to be at 98, mean that you've lost 2 grand, should mean to me that you've probably lost 20 trades in a row. And if you lost 20 trades in a row, probably stop trading that account and call me, hit me up, or ask some more questions in the Breakfast Club in the morning so we can fix that. You're not going to lose 20 trades in a row. So how are you going to get to 2 grand? Now, you might be saying on the flip side, but Jay, then it's going to take me ages to hit my target. Maybe. What would you prefer? What would you prefer? Wouldn't you prefer? Because let me explain something to you. When you get up, when you start small and then you get up and you're 105K up, guys, really then you can talk to me. I'll say, I tell you what, bro, increase your risk. Stop taking 0.1% risk, and I want you to take 0.25% risk, risking £250 a trade. If that starts going wrong and you get back down, start losing a certain amount of money, I'll say go back to 0.1, drop it back down. That you can do that because you're up. You're up. You get me? You're up. Maybe you're even just 2 grand up. And I'll say, can't you increase your risk a bit, bro? You're doing well. You're taking good trades. Increase your risk a little piece. It's just cream you're playing with. You're playing with house money. So go for it. Especially if the setup's really, really good. If the setup's not really, really good, why am I going to tell you to increase your risk? Why would you do that? If the setup's really, really good, it's right at the top of the thing, boom, 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 you checked it, you're looking at it, oh my gosh, it's breaking structure. Cool. But the aim of this trading thing, I'm telling you, I study the game. The guys that are doing big things, and I see them, and I see these little hedge fund managers, and but the risk that they're dealing with is minimal risk. There's the other guys, the flippers, screw it, I just risk 5% here on this trade. They're the guys that don't tell you about all the losses. There's the guys you hear about them saying are madness. It's not sustainable. You might get a good result one-off, but it's not sustainable. All right. Does that make sense? What I've been saying? Does that hit home a little piece?
100%. It lights up the light bulb again. Still, I was just leaving it for a bit to start it, but I'm due to buy it again today, man, and just chip away at it slowly.
Just chip away at it, bro. Just understand Literally. What's going on. Understand that it's just risk management. If you understand the strategy, it's just risk management. It's just risk management, I'm telling you. Because you will find that, let's imagine that you just got lucky now. You got lucky, you're quite heavy on your risk and you pass your challenge, or you got some money. People with big money drop their risk. People that have big money in their account do not increase their risk. You're not going to get to a place where they fund you £1 million. Like you've got some, I don't know, you bumped into a guy in Dubai, he loves your energy there, G-Van. He's like, oh my gosh, you're the guy, I love your music, I love everything about you. I'm going to give you £1 million to trade because you said you're a trader and you show me some history. You're not going to start upping your risk and taking 10% risk at a time. Why would you? What, to blow his account? When you could take minor risk and still be making enough dough to be in Louis Vuitton every day. Taking less than 1% risk. Less than 0.5% risk, you could be taking those trades and still every single day you're in Louis Vuitton. So if that is the end goal that you're seeing all of these successful traders doing, their risk is they drop their risk, they're managing their risk. The issue is can you start like that? And starting like that is where the patience comes into play. And like I said to you, it's like it goes against human nature. You know, we've all had to learn this. But I'm allowing you to learn from my experience. I'm tip of the spear, remember. You can learn off of my experience. I'm telling you. Yeah, I'm telling you. And you might think to yourself, oh, that's not exciting and that. But let me tell you something, this thing's not supposed to be like a Hellraiser every single day. It's just like, oh, your hair is blown in the wind. It's not supposed to be that. It's supposed to be like, yes, you love it, you got passions for it, but it's supposed to be like, this is your work, bro. You're working, bro. It's how you get paid. It's how you pay your bills. You know, I've had to realize that. Yeah, it's supposed to be how you pay your bills, like how you can generate money. And then when you've got enough of money in the bank, then it becomes fun because every single day when you only risk 1%, you're phoning me and say, Jay, we saying we on? yeah. I've just got the new Porsche, man. Come, you want to go for the spin? I've got the Porsche outside. And I'm like, now we're fun. Now it's fun. But prior to that, forget about the Instagram lifestyle. It's work. Got work. Got to be disciplined. Should I do one more pair before we finish? If it is, just let me know which one you want me to have a quick look at.
Yeah.
Yeah, bro.
I don't know. What did we do today? We did Euro USD.
We
US
did
30.
GBP USD. Let's go use the US 30.
Yeah,
Good
US
one. 'Cause we haven't
30.
done US 30 for a little while. It's the US 30 USD. All right. Now, you know, I'm so happy with my own development as a trader. But my own development as a trader, just because of my nature, has come from my own experience. Like, as in, I've had to go through the pain. Yeah. And I've gone through pain, yo. Yo, I've blown money in the markets. Don't get twisted. I've blown big money in the markets. Yeah. But you see, I have a bigger plan for what I'm trying to do and what I want to achieve. And that's my journey. Someone else's journey is different to that, and I'm happy for them. It's my journey. Because no one can't turn around and say to me that A, I haven't put in the time and the effort. B, that I haven't learned by experience, yo. Not just the theory of it. Not just the theory of it. There's man out here pushing the theory of certain things from early, bro. I'm out here getting payouts, trading my own money, making money, doing what I need to do, and teaching and having a strategy that is robust and being able to convey that strategy, hopefully in a right way whereby I can teach and empower other people. You know, I went out on Jason's fight night and we was all a bit emotional. You get me? He was having a good night, but Jason said some really lovely things to me. He probably, I don't know if he remembers, he said some things to me in the toilet, pause. Yeah, in the bathroom, pause. All right.
No Diddy.
Yeah, no diddy. No diddy. Yeah, but we was there. Yeah. He's probably working or driving or something like that at the moment. Yeah, and that's what I do this for, yo. Like I probably would have. I'm not even going to say that, but I'm saying to you, like, I enjoy being here and sharing this journey with everyone here. Do you get what I'm saying? And the others. Obviously, we've got a few people here that make it in the morning, soldiers. Yeah. But the reality is that, like I said to you, the bigger picture is man does the work. If you're doing the work, you'll get the results. No one can't turn around and say to me that I haven't dedicated myself to something. People that think to themselves that this is all results, you know? Like, I heard someone say, like, you know, that like an element of what you're doing is like, it's not fake it until you make it. No, it's not that. It's being the person today who you want to be tomorrow. Let me get an amen to that. Yeah. It's being the person today who you want to be tomorrow. Do you get what I'm saying? Like, man who go gym every single morning, who's fat. He's got every you know, you bumped into a man before and he's got chest hanging and his belly's hanging. He goes gym every single morning. He said, what are you doing? He said, yeah, but I don't miss gym every morning. You can't take the piss out of him. You might look at him and be like, bro, gym every morning. But you can't take the piss out of him because he does go gym every morning and his journey's got to start somewhere, right? Do you understand what I'm saying? It's like he's got to be the gym man before he gets the muscles. Can you get what I'm saying? Can you get my point? You man have to be the trader who's dedicating himself to trading, who's learning, who's doing the things he needs to do, who's waking up every single morning, who's talking the talk, who's walking the walk, he's looking, he's reading the books, he's doing the analysis before you become the trader. You're not going to become the trader first, then you start walking the walk. Am I making sense? Can someone hear where I'm coming from here? Like, don't let anybody like G-Van's doing the rapping thing.
Perfect sense.
Yeah. So, you know, I heard somebody said to me, like, blah, 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 like, you know, like, so what have you pulled out? How many millions have you pulled out of the markets? I'm like, not yet. What soon? But I'll pull out decent money. He's like, okay, so if you haven't put it, I'm saying, bro, you don't get it. That's like you turning around to your doctor, who's a doctor, who's qualified, and he's going to go and do something to you. And your first question to that person, bear in mind, you got some, you know, you got a new problem. This is a new problem to us. It's not like to say that, you know, prior to that, they've just been doing, you know, a surgery since they was 4 years old. And your issue is that they're only 25. So therefore, they haven't done enough heart surgeries. He's the best, bro. He's dedicated himself to learning this thing. Yeah, you're gonna. I mean, on the flip side, you're gonna get an old man who wants to open up your chest, and his hand's shaking like this, but he's gonna tell you he's done mad surgeries, and his hands. Oh, you can't even see my camera. My camera's off. His hand's shaking like this, with a knife. You have to see it to believe it. You have to become that, and sometimes that is pain. Sometimes that is sacrifice. Sometimes that isn't the immediate results that you want. But if you do not dedicate yourself to something, how are you going to achieve something? Like my life has been dedicating myself to certain things because I understand that's the only way I'm going to get certain things. Sometimes people get a break. They catch a break, they get lucky, or they make their own luck. And, you know, I don't have to say get lucky. Sometimes you catch a break. But more times out of 10, even when you catch a break, you get things from hard work. Look around you, all the things that you have around you, more than likely you got them from hard work. More than likely somebody didn't come and drop off your TV in the mail. You just needed to watch TV and you just manifested it and someone just came and dropped you one. More than likely you had to graft for it and pay the money for your flat screen that's sitting on the wall. So there's no difference here. And don't let anybody tell you different. And more importantly, you've got to believe it. If you don't believe it, nobody else don't believe it. You've got to believe it. And that's not just with trading, that's with anything. You've got to believe that you can. Because I can't believe you can before you can, before you believe it. And I know it can be difficult because life beats you down. People don't believe in you. People don't support you. Yeah. You're your own cheerleader. If you do have somebody supporting you and somebody who believes in you, hold on to them people, you know. Stay close to them people that believe in you. But if you don't, doesn't matter anyway, because you got to believe in you. You have to believe in you. You have to see the bigger picture. And the bigger picture for, like I've just explained to you guys, is just with 100K. If you want to drop it, forget 100K. Let's say 50K. Let's say 50K and you could make, you know, your 10% on it. Yeah, a month. That's what the challenge will need you to do. That's what the challenge needs you to do. So let's say even you got 50K and you make 5% a month, 2.5K from your 50K. Let me tell you something for free. Your property guys are not making 2.5K per month off of 50K. I'm telling you. Even if you buy, rent, refurbish, blah, 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 if you do the math on it, you're either spending more money, putting more money into it, and it's not continuously 50K for the next 6 months. It might be the case you done it, you flipped it off, you bought some small property as you're able to put in just 50K, add in value of it maybe. And yeah, maybe you did make a quick 15, 20K. That's not you making 2.5K every single month for the rest of the foreseeable. Just look at it like that. Think about the potential of it. And I know it's scary. It is scary. Put your money into a broker, start trading, because you could lose it. No risk, no reward. And that's why you can manage your risk. That's what I'm talking about, managing your risk. I could be another guy, you know, telling you, yeah, man, put your money in there, boom, let's go in at 1% or go in at even 2%. Because when that trade hits, it's gonna hit, boom, 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 you're gonna make massive. I could say that to you. Because it's true. That trade might hit. If that trade hits, you're gonna be looking at your account, it says 6 grand. What if it doesn't hit? Do you have another 50K to go again? Or another 20K to go again? Or your life savings? You don't. Most people don't. Most people ain't got 50K just sitting there waiting to throw into waiting to burn. Yeah. So I'm trying to tell you the right way. And the right way is mostly about long-term results for our people. You see, really where I want to get to, guys, is to be able to build myself up to the point where I do get the right licenses, align myself to certain things, and I can trade my people's money. Yeah. I can be a fund. Yeah. Be able to turn around and be like, okay, cool. We've got a family, and just between us, we have an agreement, we understand it, and I'm going to trade different because I can continuously make the 10% every single month. So therefore, I could give you 5% a month, and I could take 5% for myself. 5% a month on your money is 60 grams because everyone, your auntie Jackie can't trade, grandma can't trade, but they do have this store and they want to get a return. And if I can do that successfully and I can do that safely, because I'm not going to take anybody's money before it's safe, then we start growing wealth in our community.
You're saying the private wealth club?
Of course, 100%. Because I know that what ultimately I want to do is have massive money under management. You know what I'm saying? I've seen money. I want massive money under management. I want to turn and say, I've got, 50 million under management. And if I could turn and say, that 50 million was predominantly family, like people are getting, like we're making people money safely. With all the right things in place, compliance officers in place, risk managers in place, everything in place. So this is going to be amazing. Yeah. Allow people to imagine I can allow people to even get their profits back in different ways. Maybe from that, the program is funding people's property purchase because you've got money in equity. The fund can fund your deposit for a property to go and do XYZ to broaden your investment portfolio. Yeah. Because people don't know what they don't know. People may have come into money, but they didn't know how to grow that money. Now that money's gone. I know. I've spoken to them. I speak to them. They said they sold their house or they came into money. Somebody died. They made a certain bit of money, blah, 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 blah. And they didn't know what to do with that money. They didn't know how to trade it. They didn't know how to invest it. They didn't know how to do anything. So therefore, they had to rely on somebody else, or they didn't, and they blew that money. And when you're relying on somebody else who don't look like you, doesn't have your interests at heart. When I say don't look like you, that's not the main thing. Because I never want it to be about that. I'm not gonna lie to you. I'm pro-black. I'm not anti-white. I'm pro-black. I'm pro myself, pro my own people, my own success, people that look like my child. But I'm not anti anybody else. There's no longevity in that. We all live in the same spinning ball, if you believe that. Yeah. But we have to make sure we understand that these things that we're learning, the things that we're doing, the things that we're getting into, we need to start taking action on, So I'm saying to you right now, guys, if you can't buy a 100K account, buy a 50K account, buy a 10K account. Yeah, and start getting into that risk man. Start looking at your phone and being happy that you made £4 a day, £8 a day, £7 a day. Everything's blue. Just be happy that everything's blue, because then the only thing you need is more cash. And I'm telling you, there's people out there who have cash. There's people that your friends and family who have cash. Don't know how to grow it. They have cash. And if they tell us, I don't mind risking 10% on GVAN because I like him, and that 10% is 10 grand, well, automatically now you've got cash. Or that 10% is 100 grand because they got £1 million sitting down. Yeah. All right. We're going to look at this US 30. So this US 30, let's zoom out, understand what's going on. And we're going to finish up real quick with that. All right. So this US 30 has been bullish. Have a look at all the way on the monthly. Making higher highs, higher lows, higher highs, higher lows, higher highs. All right. Now, if we drop down our time frame, we can see that right now we're in a bullish leg. Okay. That bullish leg is market pushed up here, bullish. Came down here bearishly, continued pushing up here bullishly. Now we've broken this structure over here, this high. We broke it, made an indication above it, corrected, and now we're currently going sideways in here. But we are at the top of this angle here, this range. We're at the top of it. And the question is this market now want to turn around to try and let me sorry, that isn't what I wanted to, the yellow range, sorry. We're at the top of this yellow range. Okay. So we're at the top of this white range, But where the question is this market want to push up to the top of this yellow range? Or is this market going to respect this white range? Remember, this isn't drawn to the millimeter. This is just general. Yeah. So right now we're in consolidation. The market's going sideways. And furthermore, within that sideways action, we're actually in the middle of a sideways action. I am not overly excited about getting involved in the middle of a range. Look at it. Look at this freth. I'm on the hour time frame. Look at it. Up, down, do the hokey cokey turnaround. Unless I'm very small in here and I caught a trade at the top of this wick and I got out somehow down here. I do not want to get involved in this for any long time period because it doesn't know what it wants to do. The market was coming down here. The market said, oh no, we want to push up, started breaking structure up here. The market got to this level of structure here, which looks like to me 50% of the impulse. Have a look from here to here. Yep, look at that. 50% of the impulse. So realistically, energy-wise, it looks like the market wants to do this. Yeah, because since it came up to 50% of the impulse, then it started to break structure bearishly. Now we did have this massive push up here, which is yesterday, I believe. Yep, boom, which came back up and made these equal highs, creating some liquidity above this level here. But ultimately, my gut, all right, says that this market wants to push down. So my gut says this market maybe wants to come down here. But it's not great. It's not one of them ones I'll be like, yep, let me increase my risk, let me go in for it. It's a bit like, yeah, not sure. But this market was coming down here. We've just about broken these levels down here. Right now, as we're speaking, the market is just pushing down a little piece below these little levels. But prior to that, look, the market was in here going sideways. All this is just some sideways noise. Yeah. I'm not in a rush at the moment to get involved. But at the moment, we've seen it break outside of that little sideways nonsense. Let me try and zoom in and have a look at it. But we're kind of in the middle of a range. All right. So we have pushed down in here. Let me try and draw this a bit better. But before it was like here. This was the consolidation before. And the market indicated, pushed all the way back up here, corrected, closed the imbalance, and then came down here, continued on a 5-minute time frame. That was the continuation here. Where's my short position? Here. Okay. You know, like I said, I don't love it. All right. I don't love it for where we're positioned in it. And we're coming near to the bottom of, draw this range a bit better. This little area in here. Yeah, I mean, I'd be in here looking for the sell. My energy is that the market's going to be bearish for the sell. We've already seen a 5-minute push out here. I'm a little bit concerned that if I go to my, say, for example, hour time frame, in the next 28 minutes, there may be some imbalance in here that needs to be closed. So the market may kick back. But here, if my stop is above here, how much pips is that? It's quite a lot of pips. All right. Placing my stop above here on a US 30. You should be okay. All right. On the basis that this market indicated here, came up, closed the imbalance, didn't quite break this structure over here, pushed all the way down here. But like I said to you, I would be concerned about all of these red candles, 1, 2, 3, 4, 5, 6 red candles like this. And then this market deciding that it wants to push maybe back up in here first before deciding it wants to come in here. So what I'd say is this, because right now I can move this because we've broken below. See this little wick over here? We've closed below here, indication on a 15-minute time frame. I'd probably wait for this to happen again. Correction, continuation, wherever it may be, and then make a decision of whether or not I'm going to be getting down here and placing my stop, depending on how it retraces above this last high, or the safest place below above here, which is also outside of the market that the market is trading within, on the basis that we can try and get down to the bottom of this range, this gray box, and ultimately beyond. But when we get to the bottom of this box, I'm expecting to see some sort of, when we get to the bottom of this box, I'd be expecting to see some sort of reaction before the market just keeps coming down. But at the moment, I'll be bearish on it. But for me, on a larger time frame, looking at it, this is the 4 hour. So we're kind of in the mix of here of this consolidation range. But again, another reason why I'd be potentially looking for the sell, even though it's in this consolidation range, because we came from here, we pinged, we ponged, we pinged. I'm thinking maybe there's a pong. Yeah, I'm thinking maybe there's a pong. Also on a larger time frame, like I said to you, we're up into the in a larger time frame. Like I said to you, we're not quite up on this white line range, okay? And that's why that bottom of that gray box first would be my first, like, okay, because the market might get to here and then decide it wants to get to the top of that white range. Or even if we see this market push down here quite quickly, that might just be it pushing down to tap that blue line, which is a larger range, before it decides to push up some more. All right. So I don't love it. If I was to score it, I'd be like, it's like 6, 7. But if it had a gun to my head, and if I'm looking at it and I was taking a trade and managing my risk, so I wasn't too bothered about, the outcome's not going to ruin me, I'd be probably saying I'd be looking bearish for this market, at least down to some of these targets. Equal lows over here. Some lows over here. Understanding these targets as this market, expecting this market to have reactions all the way, because it's very volatile, very sensitive. And in a bigger picture, the bottom of this range would be somewhere where I'm like, I've won. Well, I've won anyway, based upon here, but this bottom of this range, I'd be quite concerned. Even the bottom of this low here, anywhere near this low, I'd be quite concerned that this market might be deciding that it's doing something else. All right, this one's a bit more complex because of where we're at with it. A bit more complex in regards to the range. But that's my thoughts at the moment. I may be wrong. This market might just turn around right now and start pushing up higher. If that's the case, that's the case. That's why we manage our risk.
Makes sense.
Guys, good morning. Yeah, thank you for your time. Have an absolutely lovely day. I'm gonna put on something here on the live room. Something that we might be able to get some education about. What? I don't know, but let's have a look. Let's go here. I saw something that I like. I'm just checking to see if there's anything else a bit better. Let's go Candice Owens versus Piers Morgan. I was going to put something else on. We'll go here first. See what they got to say. Something different about whatever it may be. Yeah, cool. I'll put that on. And if you're here in the room, then great. If not, guys, have an absolutely fantastic day. Yeah, love and blessings.
Love, my bro.
Cool.
Why did you leave the Daily? A lot of attention's been focused on you constantly referencing Christ is King, but to deliberately use that phrase was a deliberate act of provocation to people like Ben Shapiro.
I want every single person in the world to declare Christ as King, whether you believe them to be a Nazi, a white supremacist, a Jew, a Muslim. It is the phrase itself that I want declared.
Who do you want to win the war, Ukraine or Russia?
I don't want Zelensky to win. I don't want Putin to win. I believe Zelensky is just as corrupt. I believe he is a criminal. What percentage of a population has to be killed before we can use the word genocide? It's a funny little thing. They won't tell you.
She said here, I would stake my entire professional reputation on the fact that Brigitte Macron is in fact a man. With that statement, your entire professional reputation goes up in smoke.
Burn. You got me. You go, girlfriend.
I'll bet you $100,000 right now that it is established beyond any doubt that she was born a woman. Do you accept the bet, Candice?
Whoa. No. At best, Brigitte Macron is a pervert.
My next guest is a hugely influential YouTube commentator with an army of followers, a person who says they were fired for speaking their mind, but then came roaring back with an even bigger show. And no, it's not me. Candice Owens launched her new independent show this week. She's previously described me as dishonest, a snake, and a toddler. But in the true spirit of Uncensored, I'm delighted to say Candice joins me now for our first ever interview. So finally, Candice Owens, we get to do an
I'm
interview.
very happy to be here, Piers. I promised. And honestly, credit to your producer, because she just was like, I'm going to make it happen no matter what. So
I
great
have
to
a
be
bunch
here.
of ruthless Rottweilers of both genders who didn't let it go. And what did you want? Because you are a fascinating public figure. There's no question about that. I think we're going to have a fascinating interview. I do want to go into some more detail before we start, though, to show the level of my generosity in giving you this platform on my show, given some of the stuff you've said about me. So April 2022, when I launched the show with my interview with Trump, it all kicked off, obviously, you said if my team was unethical and dishonest as the snake Piers Morgan, we'd have sensationally edited this clip of Trump to make it look like he threw a tantrum and asked the cameras to be shut off when in reality the interview was over and we simply wanted to chat off camera. I responded, I bow to your superior knowledge of being a snake, Candace. Tune in on Monday and you'll learn something about real interviews. You then said Piers is whatever he has to be on any given day for attention. He's not guided by any set of principles, which is why I say both sides need to stop platforming his sensationalism. In March of that year, I accused you of falling for Putin's propaganda when he invaded Ukraine, and I called Putin the new Hitler. You said you're such a toddler, Piers, that's way too old to be seriously entering in a literally Hitler analysis. Keep yourself contained to mean tweets about Meghan and Harry while the adults discuss foreign affairs, NATO and Western hegemony. In March the same year, you wrote with a picture of Finding Freedom, the most historical thing Piers Morgan has ever read. In January 2022, you said, I find Piers Morgan to be morally inconsistent, which breeds intellectual dishonesty. I welcome a public discussion with him about systemic racism, a topic with which he's impassioned, although apparently not impassioned enough to speak with me about it. Why do you suppose that is? You added, we're all at the edge of our seat waiting for an answer here, Piers Morgan. Well, okay.
You should do that more often. I like when you read mean tweets about Piers Morgan. That was great. I salute you for that. That was wonderful.
Exactly. And the truth is, I actually do want to give you a platform, and I have no problem with that. I would obviously contest much of your characterization of me in some of those mean tweets, but that's fine. We can move on because there's a much more interesting story, I think, involving you, which has played out in the last few months, which everybody knows about. So let's just talk about that. Why did you leave the Daily Wire?
Well, unfortunately, I can't talk about the specific reasons that I left the Daily Wire, but what I can do is respond to whatever reasons were given to the public. And obviously, no sooner did we agree to leave than Andrew Klavan of the Daily Wire did an entire episode stating that the reasons that I was leaving was because I was anti-Semitic and I was engaging in a type of anti-Semitism that was hard to pin down. And that is why in my first episode of launching my independent podcast, I hit back pretty hard at him because, I think it's pretty despicable, first and foremost, as a colleague who I had a great relationship with, to have engaged in that, knowing that I was not at liberty to say anything. I thought it was a very underhanded, disgusting tactic, and I responded in force.
I want to play you what Ben Shapiro told me when I asked him about this on Uncensored. One of the consequences of this war has been a lot of very high passions on both sides, a lot of angry disagreements. You and your company have been at the centre of a very high-profile one at the moment with Candace Owens, who's now left Daily Wire. Was she fired, or did she leave of her own volition?
I'm not going to speak to this topic, Piers.
At all?
At all. The only thing I will say is what I've said all along with regard to Candace or with regard to any of our other hosts. I am not in hiring and firing position with the Daily Wire. I'm a co-founder of the Daily Wire. I'm a co-owner of the Daily Wire. I'm not actually in management. And as far as the free speech situation, what I will say is that no company has the obligation to literally pay anyone. The Daily Wire is a publisher. It is not a platform.
Do you agree with that, Candace?
Agree with which part?
Well, okay, any of it.
Well, I think that it's interesting, and I'd love to sit down with and debate Ben Shapiro on a number of topics, particularly cancel culture, because I know that he's made some comments in the past that he believes that publishers, platforms should allow people to have different ideas. And so those particular comments to me sound in contrast to what he has said in the past. But I can't speak on behalf of him, obviously. I personally believe that media companies are healthier when you allow people to have different opinions and allow people to debate those opinions. Personally, I love to see a debate between two people. And so I can only tell you what my perspective is and can't really speak for him.
I mean, he made the point at the end there that any company, any private company, when it comes to free speech, is not compelled to pay people to work for them. I mean, would you accept that as a principle?
Well, what I would say again is that it just kind of runs into what is wrong. I guess the question you could ask is, what is wrong if CNN fires somebody for having a different opinion? What then is wrong if Fox News fires somebody for having a different opinion? Your answer would have to be that it's not wrong and that companies are at will to curate whatever belief system that they want and to not allow free speech. So, you know.
Out of interest, is it true that you signed an NDA and that's why you can't really talk about this in detail?
I cannot speak in detail about any of that stuff.
You can't even confirm whether you've had an NDA?
I am not free to speak about any topic pertaining to contracts signed or not signed. And so...
You see, this is where it gets interesting for me, because you referenced Andrew Klavan from the Daily Wire. I want to play a part of what he said, and then I'll come back to you.
Yeah.
The Daily Wire parted ways with Candace Owens, and part of it was things that she was saying that we felt were strongly anti-Semitic. And she was doing it in such a way that it was kind of hard to pin down, so I was trying to show where these things happen.
So I'm bemused because I've been involved in a lot of contracts in my time. I've been an employer, I've been an employee, and so on. I don't understand why somebody from the Daily Wire can be so explicit about the reasons you left, and yet you are not able to be as explicit to defend yourself or to counter what they're saying.
Amen, Piers. Amen. I think that is probably a question that was on a lot of people's minds. And, you know, what can I say other than what was it that Kanye was saying about contracts? And, you know, I think it is, even if you believe that it is valid for that to happen, I think it is immoral to allow someone to attack someone and to not allow them to defend their name. And so for me, Andrew actually rose to the level of defamation when he started claiming that I had actually said things that I had never said. I mean, he flagrantly lies, and I showed that on my platform when he pretended that I did an episode suggesting that Adolf Hitler burning books was a good thing. I wasn't even speaking about Adolf Hitler. It's a nonsense to think that I would do that on my platform. And it's a trick also. It's meant to make people feel emotional, like, oh my gosh, I can't believe that she's supporting Adolf Hitler. And I thought it was nasty business. I thought it was extremely nasty business. And, you know, for me, Piers, it's important for me to state, my name means a lot to me. You know, my grandfather grew up on a sharecropping farm, one of 12 children, you know, in the segregated South, Robert Owens Sr. And for him to have worked the way that he worked and to have instilled the Christian values in me that he instilled in me growing up, the idea that I would allow someone to so flagrantly throw dirt on his name, it was never going to fly.
Did you ever say or do anything which to a Jewish ear could be construed as anti-Semitic?
Well, let's be clear about all of these topics, whether we're talking about racism, sexism, anti-Semitism. Everything can be construed to an ear when you're talking about a subjective ear that I believe that this is racist. I mean, I could say, hey, Piers, you even asking me questions, and to me, it feels racist, right? A feeling and a fact are two different things. So what someone construes something is meaningless. Factually speaking, I have never said anything that is anti-Semitic, and had I have said something that was anti-Semitic, Andrew Klavan would have simply showed the clip.
Right, a lot of attention has been focused on you constantly referencing Christ is King. Many people believing that although those words in themselves, if you're a Christian, would not be offensive, that to Jewish people when they're being whipped up on social media, as they were at the time, by people who are genuine white supremacists and pretty brazen anti-Semites, that being smart as you are, you would have known that to deliberately use that phrase repeatedly in that time, in that climate, was a deliberate act of provocation to people like Ben Shapiro, who obviously are extremely high-profile Jewish people. Do you accept that?
I'm sorry, which time frame are you talking about when you say at that time?
Well, since the start of the Israel-Hamas war.
Yeah, no. So that phrase, if you're talking about when it began to be a scandal, because I think everyone was quite confused when there was suddenly this narrative that it could be construed as anti-Semitic, which is why it